Ray Dalio is not known for panic. He's known for pattern recognition. As founder of Bridgewater Associates, the world's largest hedge fund, Dalio has built his legendary career on one extraordinary skill: recognizing historical cycles before they complete. Right now, he's issuing one of the most sobering warnings of his life, and it's not about another typical recession. It's about the potential collapse of the very economic systems that have anchored American prosperity for generations. This isn't fear-mongering, this is history repeating itself. In this video, I will break down what Ray Dalio and many other legendary economists are saying about the potential storm ahead, the three forces that are colliding right now, why this time is unique, and at the end, I will share the three-phase battle plan that can help any serious investor take advantage of the looming storm to become very rich. Remember, crashes don't eliminate wealth, they reassign it. Welcome to Investments Mindset, where wealth builders come to get inspired. Before we continue, please note that we are not financial advisors. The content on this channel is for educational and informational purposes only. It is not intended to provide investment advice or recommendations regarding specific securities or investments. Always conduct your own research or consult a qualified financial professional before making any investment decision. Every investment involves risk. Let's dive in. Firstly, it's important to note that Dalio has dedicated decades to studying empires, currencies, and financial systems across centuries. When he speaks, he's not reacting to headlines. He's identifying ancient patterns that have demolished and rebuilt civilizations with eerie consistency. According to his research, we're now entering one of those rare moments when multiple catastrophic forces converge simultaneously. And when that happens, wealth doesn't just shift slightly, it transfers massively and permanently. The warning signs never appear suddenly. They accumulate quietly, invisibly, building pressure beneath the surface until the entire system can no longer contain it. Here are the three forces colliding right now. The first force is the debt and credit cycle. We've crossed from dangerous into mathematically impossible territory. The United States government now spends vastly more than it collects, and interest payments on our national debt are consuming larger portions of the federal budget than entire government departments. This isn't political commentary. This is pure mathematics. When debt compounds faster than your ability to generate income, something eventually shatters through default, runaway inflation, or currency debasement. There's no fourth option. The second force is internal conflict, fueled by extreme wealth inequality. History shows that when the chasm between asset owners and non-owners grows too wide, societies fracture. Trust in institutions evaporates. Cooperation becomes impossible. And without cooperation, the hard economic decisions that could prevent catastrophe never get made. The third force is technological disruption, accelerating at breathtaking speed. Artificial intelligence and automation are transforming labor markets faster than our structures can adapt. Workers are being displaced while wealth concentrates further, widening inequality and feeding the cycle of instability. Before we continue, if you find value in this video, even just a little, please subscribe and hit the like button to help us continue to provide more insightful and educational videos. Your support is highly appreciated. Thank you. Now, let's talk about why this time is a little different. What makes this moment uniquely dangerous isn't any single force, it's their convergence. Economic systems can absorb shocks when they have flexibility. Ours doesn't. Interest rates can't be slashed without igniting inflation. Government spending can't expand without worsening debt. Money can't be printed endlessly without destroying trust in the currency. It's almost as if we're trapped with no easy exits. But this is the most essential point you need to know. Every major financial collapse transfers massive assets from the unprepared to the prepared, from the impatient to the disciplined, from those who react emotionally to those who understand cycles and act with precision. Unfortunately, the reality seems completely masked. For instance, despite rising costs crushing households, shrinking purchasing power, and growing financial strain visible everywhere, markets sit near record highs. But remember that this disconnect is not new. It has happened several times before major crashes. In the late 1990s, The narrative was that the internet changed valuation rules forever. In 2006, it was believed that real estate could never fall. Today, it's the assumption that AI will somehow outrun every economic constraint. But beneath the surface, three critical forces are building catastrophic pressure. First is the debt squeeze. Second is the Federal Reserve policy trap. Rate cuts don't signal strength, they signal stress. Third is extreme valuation risk. The ratio of total stock market value to economic output sits near historic extremes. For instance, while Warren Buffett does not explicitly state that the entire market is overvalued, his investment decisions at Berkshire Hathaway suggest he is concerned. Now listen to the ultimate truth. Crashes don't eliminate wealth, they reassign it. They transfer it from those who don't see it coming to those who do. From the fearful to the fearless. From the reactive to the strategic. Dalio's warning isn't about panic. It's about intelligent positioning before the storm arrives. While everyone else panics during the next recession, paralyzed by fear, you have the opportunity to profit massively. Recessions are the greatest wealth transfer events in human history. And now you can position yourself on the winning side. Now here's your three-phase battle plan. Phase 1. Prepare while others party. When everyone's celebrating record highs, you need to get ready. Right now, stack cash like your life depends on it. Open a high-yield savings account and stuff it with money. Think about this. It's widely publicized that Warren Buffett's Berkshire Hathaway has been a net seller of stocks for over a year, building up record cash reserves estimated at over $340 billion. So listen, do you for a second think this is just a coincidence, or that the Oracle of Omaha himself knows something big is coming? Cut your debt. Diversify ruthlessly. When the crash comes, and it will, you'll have ammunition while everyone else is bleeding out. Phase 2. Attack when others retreat. This is where champions are made. When stocks are plummeting and fear is everywhere, that's when you strike. Use dollar cost averaging to buy consistently every single week. Don't try to time the bottom, you'll miss it. Just keep buying quality assets at fire sale prices while everyone else is running for the exits. Remember, the stock market is the only place where everything goes on sale, and people run away screaming. Phase 3. Dominate the recovery. That's because the markets always recover, and I mean always. They come back stronger, higher, better. And when they do, you'll be sitting on assets you bought for pennies that are now worth dollars. Now you have two paths. Path 1, ignore this, do nothing, and watch helplessly as the next recession wipes out years of dedicated investment. Path 2, start preparing today and position yourself to profit massively from the greatest buying opportunity of the decade. The 2026 correction is coming. The only question is, will you be a victim or a victor? If you're serious about building real wealth, then consider this channel your financial gym. Every video is a workout for your portfolio, your mindset, and your money skills. If today's video helped you level up your financial education, even just a little, please smash that like button and subscribe so we can continue to grow and build wealth the smart way. Please note that we are not financial advisors. The content on this channel is for educational and informational purposes only. It is not intended to provide investment advice or recommendations regarding specific securities or investments. Always conduct your own research or consult a qualified financial professional before making any investment decision. Every investment involves risk. Click on the next video on your screen. Thank you, my friend.